Join thousands of NFT traders who already start their day on CryptoSlam.
The buzz of excitement over India's crypto tax is fizzling out fast, and we're finding out why. Welcome to the Daily Forkast, February 8th, 2022. I'm Angie Lau, Editor-in-Chief of Forkast, covering all things blockchain. Well, just 1 week after exchanges in India welcomed news of a planned tax on crypto income, that initial joy has now been replaced by concerns over a lack of clarity. We're going to take a look at that story and a whole lot more coming up. Let's get you up to speed from Asia to the world. Well, let's kick off with the big stories we're keeping an eye on around Asia today. First up, Japan's largest bank plans to issue a stablecoin tied to the Japanese yen. According to Nikkei Asia, Mitsubishi UFJ is planning to launch the yen-pegged stablecoin next year, allowing instant settlement of securities transactions. Now, the megabank is aiming to cut costs and create efficiencies, especially if you compare it to similar fiat transactions, which currently take a couple of days to process. Well, it's also planning to incorporate blockchain technology into securities trading, opening doors for retail investors with less liquidity into assets like corporate bonds and real estate. The move follows Japan's financial services agency announcing that authorized banks and wire transfer companies will be allowed to issue stablecoins from spring 2023. Now, over in Korea, crypto exchange Bithumb is going for gold in the Beijing Winter Olympics. The exchange promises to make an NFT drop every time the South Korean team wins a medal. Now, Bithumb is partnering with blockchain-based sports content platform 300fit on this Team Korea event. Every medal means any South Korean fan has a chance at 10 regular and 1 special NFT in the 24 hours following any medal successes. Bithumb looking into capitalizing on the national excitement and bring the virtual asset and sports industries together. But it's kind of hard to get a little too excited just yet. South Korea's medal tally is currently sitting at 0. You can find those stories and more at forecast.news. Meanwhile, in India, excitement over the new crypto law getting muddied by a lack of clarity. Exchanges had initially welcomed the 30% tax on income from crypto transfers announced in last week's budget. However, while it was seen as a sign of legitimizing the industry, questions are now emerging over how the laws will actually work. Forecast News' Monica Ghosh has more.
While the tax announced last Monday by Finance Minister Nirmala Sitharaman quelled fears of a ban on crypto, the law has since raised more questions than it has answered. The 1% tax to be deducted by the buyer for transactions of over 10,000 rupees or 50,000 rupees for specific individuals is a particular concern for many, with 10,000 rupees worth around $130. It's an issue as buyers do not have access to the necessary information from the seller to pay the tax in advance as required by the law. Not only that, the advanced tax rate could exceed the returns daily traders expect to see, as well as taking a lot of extra time and effort to file. But one investor told Forecast it could have some benefit.
What it could potentially encourage is people doing more due diligence on the sort of tokens which actually make a difference, where the token actually captures value created by the project, and decide to hold those tokens and hold them for longer periods of time, as opposed to treating them as chips to be traded.
However, Gaitonde says there is still a lot of work to do, especially with clarifying the status of non-custodial wallets. Meanwhile, according to the Economic Times of India, the Blockchain and Crypto Assets Council met over the weekend to discuss concerns over how the tax could hit trading volumes. However, according to data from CoinGecko, that doesn't seem to have happened quite yet, with exchanges including WazirX and CoinDCX seeing a continued boost to their trading volumes. For Forecast News, I'm Monica Ghosh.
Well, the escalation in Eastern Europe between Russia and Ukraine has the world on edge. An all-out war would not only risk lives, obviously, in the region, but it can also have far-reaching consequences on energy markets as well as just about every other asset. So how will these developments impact the world of crypto? With Kelvin Lam, CEO of Lithium Finance, we're going to find out. He joins us now to break down the risks for the world of DeFi, and it's good to see you, Kelvin.
It's good to be here, Angie.
You know, Kelvin, this serious threat of a possible war knocking on the Ukrainian door and really putting the world at edge, given that Russia is also the third largest player in Bitcoin mining and putting a lot of concerns in crypto right now. What impact could an actual war have on crypto assets in the region and in the DeFi space, you think?
We often like to describe Bitcoin in particular as a digital gold, but they've actually displayed more correlation to equities over time. So I'd like to think that the mounting tension is obviously sending shockwaves, particularly in oil and gas, as you mentioned, in commodities, and in particular Russian assets. But the overall global capital markets are generally focused on quantitative tightening these days, right? So, and if we look at the historical armed conflicts, it appears that there would be initial shocks, but the market also appears to generally not overreact in these conflicts. So my take would be that despite the shocks that we will be seeing, the medium or longer term negative impact is unlikely.
And that's one perspective. And I'm curious what you think about this. To make things more precarious even, the Russian central bank is talking about a complete ban on crypto activities and assets. How real, in your view, is a possibility of a crypto ban in the country? And do these rules apply in DeFi, or are the on-ramps and the off-ramps at risk here as well?
It's estimated that the Bitcoin holdings by Russians is estimated to be over $200 billion. That is almost 30% of the local index total market cap. So this is huge, and in real terms, I think it's probably more important to Russians than perhaps most other nations, right? So despite the fact that the Russian central bank has proposed a complete ban, President Putin has actually been reported to call for the government to work with the central bank to formulate regulations regulating crypto, right? So I think at this point, a blanket ban is rather unlikely, as policy is leaning towards taxing and regulating, which I think could be a good thing for both the crypto world in general as well as DeFi, as these regulation, well thought out regulation, if you will, brings along certainty and could hopefully drive more mainstream adoption in the space.
Do you see this talk, though, about bans on crypto assets in Russia leading to a migration of potentially mining activities to neighboring regions? I mean, how could this play out, especially in light of geopolitical tensions as well as increasing pushback on rising energy prices? And if that's the case, what are the possible ripple effects in DeFi, if any?
In the unlikely event that a ban might happen, it is not the first time it's happening. Last year, China cracked down on crypto and banned all mining and trading activities. And following that, the Bitcoin hash rate or the global computing power for blockchain dropped significantly, since China was the world's biggest mining nation at that time. Since then, however, we've seen that miners have quickly moved to US and elsewhere, and the hash rate has actually reached all-time high again recently, suggesting a full recovery. So I think the relative impact from any Russian ban would be much smaller than the Chinese crackdown last year. And if that experience is any indication, I think miners have displayed agility and flexibility in dealing with these changes in regulatory landscape.
It's almost like crypto Crypto is like water. It will always find a way, is what I'm hearing. Calvin, as usual, it's really good to speak to you. We're going to be keeping our eyes, obviously, on this developing situation, but always appreciate your insights. And that's the Daily Forecast from us here in Asia to you everywhere around the world. And you know what I'm going to say next. Hit like, hit subscribe, and hit that alert button here on YouTube. We appreciate your help always to help us reach our goal to reach more of you. Visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.